Welcome to Today Breaking News. Here's the highlight of the day. US gasoline prices are finally falling, and why? July 14. After exceeding $5 a gallon for the first time in history, US gasoline prices are finally falling, giving some relief to consumers in the world's largest users of fuel. The average retail price for gasoline nationwide is still $4.631, down from a record of $5.014 a month ago, but is still $1.485 higher than a year ago. Prices are on a trajectory to keep falling at least the next few weeks. Global fuel demand has been declining because of the high prices and the strong US dollar, making oil more expensive elsewhere. Supply remains tight, so up to that point it's uncertain whether prices will continue to fall. US gasoline prices have followed a drop in the future markets for both crude oil and gasoline. Those markets are down because investors are worried that the interest rate hike will slow the economy as central banks get aggressive in combating inflation. US demand for gasoline, jet fuel, and diesel is down more than 10% compared to 2019 before the pandemic began. According to Energy Information Administration, gasoline stations have responded by lowering prices. The dollar is also having an effect. Oil is generally priced in US dollars, so a stronger greenback market makes the commodity more expensive to holders of the currencies. Earlier this week, this dollar index, which tracks the currency against baskets of 6 counterparts, climbed across United States. 46 states and the District of Columbia have seen declines in prices. To meet what has seen some of the sharpest drops, with the prices down over the last month in Indiana by 52 cents and Ohio by 51 cents. By contrast, over the last month prices have actually risen in a few Rocky Mountain states and Hawaii. Retail prices should continue to slide, but the future markets remain highly volatile. Weakened economic activities as well as continuing cases of coronavirus in China could lead to drop in fuel demand, which would lead to lower prices later in the year. Lack of US refining capacity has caused the price of wholesale gas to rise more quickly than crude oil prices, which have added to the cost of gasoline. The so-called 321 crack spread, a proxy for refining margin, is hovering around the $45.5, down $15 from peak reached last month, but still historically very high. That means refiners are profiting. In addition, the gap between the wholesale price of gasoline, or the price refiners sell that fuel at, and its retail price is $1.2, significantly higher than the 87 cent average seen in November 2016. Wholesale prices often diverge from retail prices when the former drops sharply, as retailers generally lag in their response to such changes. Thank you for subscribing our channel. I see you in our next newsletter.